Thanks, Mike. Well, first, echoing a lot of other people today, it is great to be able to be here in person and with all of you enjoying the benefits of connecting and collaborating face-to-face. After a 4-year break, I'm pleased that we are back as sponsor of The Point under our new brand, Worldline. This year's conference is about reframing the future and how payments will look tomorrow. At Worldline, we've been working hard over the past few years to bring open banking to the forefront of the payment ecosystem in New Zealand to enable innovation and the future of payments. We're very excited that after a bit of a long haul, we now have 4 banks connecting in New Zealand to our open platform with over 2.5 million Kiwis now able to access our online EFTPOS product. And we're even more excited to say that we will soon have 5. We're currently in pilot with ANZ and finalising the market launch of online EFTPOS. This is a huge step forward, empowering local debit solutions that help drive lower costs for merchants and shape the payments future for New Zealand. But today, Miao will be joined with a video message with Nicolas Kozakiewicz to talk to you about the future of payments in Aotearoa in New Zealand. Will is head of online payments at Worldline New Zealand. Will enjoys putting his innovative thinking and product design experience into solving complex problems with big impacts. He's revolutionising the way Kiwis pay with digital technologies. And Nicolas is the Innovation Executive Advisor at Worldline Global. Nicolas has 24 years' experience in innovation and R&D, both at big corporations and in founding, funding and developing startups in Europe and Silicon Valley. He has led multinational engineering teams, from upcoming trends and technologies to business-applied revenue-generating services. Nicolas is based in Paris, and if you do the calculations, it's about 3 o'clock in the morning. So he is unable to join us today, but he is going to be available online, believe it or not, after this session for a live Q&A. So Will and Nicolas will talk to us about what we are doing with digital products on our open banking rails at Worldline and how New Zealand is in a great position to lead the world payments technology once again. So I hope you enjoy the presentation and I'll hand over to Will.
Kia pai, Maxine, tēnā koutou katoa, ko Will toko ingoa. The dreaded 3 o'clock slot. So it's 2 hours from lunch and you're 2 hours away from the bar. But it's actually good, right? Because actually you've already heard so many international and local speakers talking about the future of payments. You've all done your jobs for me. Who has enjoyed all the speakers so far? That's great, right? Which means I only just need to do one part, which is to actually bring all of our future vision back to New Zealand and talk to you about what future of payments in New Zealand looks like, and most importantly, what we're doing to get there together. Why are we the ones to talk to you about future of payments here in New Zealand? So as Maxine talked about, Worldline, before our rebrand, we've been known as Paymark. So for the last 30 years, we've been the leading EFTPOS switch here in New Zealand, transacting over 1.7 billion transactions in a year. And that's sort of, if you throw that into perspective, 3 out of 4 terminals are connected to our network. And we have been doing e-commerce with our flagship e-commerce gateway, Click. And with the joining of the Worldline family, what that means is we are now part of the global family that is the biggest payment processor in Europe and 4th largest in the world. And we now have access to all that leading research, thinking, and obviously innovation. So Ryan mentioned earlier, ECB, so European Central Bank, is now piloting offline peer-to-peer payment use cases for digital euro. And guess which company was selected to do the POC for European Central Bank? That's Worldline. So we're basically traveling around the best of both worlds and allows us to really be in that prime position to bring innovations to New Zealand. Let's talk about the history a little bit of our innovation journey. We have come a long way since 1858 when we standardized on British pounds as our national currency at that point. And in 1958, 100 years later, we've seen the first Bank of America card transaction that's now Visa. And in 1967, first bank accounts standardized through the data bank initiatives. And then 1984 birthed ETSL, which is now Paymark and we're now Worldline, and that is basically the crown jewel of New Zealand payments innovation. Together as an industry, we've come together and created one of the most successful and earliest implementation of domestic debit, which is still now the envy of the world, because why? It's ubiquitous, it's low cost, you can use it anywhere. But since then, we have been more of an adapter of new technologies rather than leaders. Contacts in 2017, and then device payment, buy now, pay later, and open banking. In 2019, Open Banking Forum put out a report that ranked a lot of nations on the open banking readiness on a 5-point scale from pioneer to beginner. Amongst the pioneers, we have Australia, the UK, and European Union. And amongst the beginners, there were Nigeria, Rwanda, Kenya, and drumroll, New Zealand. But we have come a long way, right? So today, like Maxine had mentioned, our first open banking product in New Zealand, Online FPOS, is on the cusp of getting all major banks live, and more than 2.5 million Kiwis can already say goodbye to screen scraping and pay securely online using their mobile devices. So what is the next frontier of our innovation? How do we take control and take that innovation position back and once again, as an industry, become the envy of the world? There might be a lot of answers. It could be regulation, it could be inclusivity, but as a fintech, right, we're here to talk to you about a technology solution. And our experience has shown for a new payment technology to succeed, it needs to basically do one thing. It needs to bring more for less to our users, and that's our merchants and our end consumers. You might be saying, hey, look, it's already quite seamless the way we're paying today, right? We've gone from a Mac Stripe to tapping a card, to tapping a phone, to tapping a device. That's already at the cusp of what we could do without going into sort of the scary biometrics, right? Facial recognition everywhere. We've done the poll in the morning, not gonna ask you to do it again. But the good news is, as an industry, we can now focus on packing more value into a single transaction. We as an industry are sitting on one of the most powerful networks that's out there, connecting almost all the merchants in New Zealand and almost all the banked population here as well. So when you're parting to payments tonight, I want you to all sing, I got the power, because we do, we have the power. We have one of the most powerful networks, so we need to leverage that to pack more value into each payment transaction. And what do we mean by that? When we think about a transaction, payment is only one segment of that whole journey of that interaction. Think about when you're buying alcohol, right? You first, you scan all your items, then you have to wait for the supervisor to come and check your ID. And then you have to take your loyalty card out and try to scan for it. And then finally you get to pay in, and then you have to get the receipt, right? It never stops printing, there's a field docket and something else. We as a payment industry, we've innovated the payment step to the nth degree. I couldn't even fit all of those bullet points onto the slide, but we haven't touched any of the other segments. We've kind of just gone, nah, that's not a problem. But given the power of our network, why shouldn't we use that power, use that reach of that network to get into all of those areas? And so in one transaction, because all of these other loyalty, identity, and digital proof of payment being an asset, right? All of these are just data transactions the same way as how a payment is processed on our network today. And that's our vision, right? We think the future of payments in Aotearoa is really about turning transaction into interactions. And underpinning that is a mobile wallet. And what that is essentially is just a physical version, a digital version of your physical wallet today. Whatever you put into your wallet today, you can put it into a digital wallet, whether it's your card, whether it's your open banking token, so a representative of your FPOS card today, your loyalty card, your digital ID, and in the future, CBDC. They could all go into your digital wallet, and this wallet can sit in your bank app, sit in your merchant's app. It's accepted everywhere because our payment network is everywhere. And what are some of the benefits? I woke up this morning, I was like, oh, I'm getting dolled up for this conference, right? I look great, look into the mirror. And then I saw, what is this thing? This just doesn't look great. But that's my wallet. I had to carry it with me, imagining leaving that at home. So if there's one thing you're taking out of this conference today, is the future of payment of Aotearoa will make you all better looking in the future. And think about the online use case. Today, the biggest challenge is we can't know who's behind the screen. Their identity is as best as what they claim it to be, right? With this digital wallet, you can now trust in a strongly trusted way, get away with actually proving who you are without having to use the current tool, which is foolproof, AI-driven, and completely non-crackable button that says, yes, I am 18. So think about that as the future. And yes, there's a lot that we need to do as an industry to get from here today to where we are in the future. And we're starting to work on that as a group. And this is where I'll pass on to my colleague, Nicolas Kozakiewicz. And remember that name, Nicolas, I promise, from the video to explain to you what we are doing in that space.
Thank you, Will. And to go from here to there, what about leveraging some technology to take digital payment to the next phase? Talking about technology, what is internet? Well, internet, it's about transportation. Well, we hope that it would be teleportation, but it's mostly transportation. So it's using a mutualized infrastructure to carry different assets that were on discrete infrastructures. For instance, here, instead of sending a letter, you just digitize your letter and send it over to the next person. That's the same thing. Or for payment, instead of having cards and terminals, you just hook up the two banks. So the first power here of internet is that ability to transport. But there's a second big one. That's that they're all going through the same hoop. And that's interoperability. Now I can link events. I can link a payment to receiving or sending a letter. Should I have problem with security? That's fine. I'd add SSL. But there's still one thing that is missing. It's trust and genuineness. What guarantees me that that person or that money is genuine? And we have a solution. That's called the blockchain. So the blockchain is like this box. On that box, you have a slot, a keyhole, and an output here in the form of a printer. But not any printer. A printer with a very specific paper, very thick paper with metal threads in it and a special ink, something that you cannot easily forge or modify. When someone puts some information in, the blockchain will certify that information. And should someone bring some other information afterwards, then that next information will be appended after it. So there's this chronological order. But you're going to tell me, if you can print it once, you may probably be able to modify it or something. Fair enough, that box is in the physical world. But here, we are in the digital world. And another power of the digital world is the Control-C, Control-V, the ability to make exact copies. So let's use it to our advantage, and let's make lots of copies of that output, and we put them behind bars, so that if someone should want to make changes there, they would have to break an entry here, break an entry here, break an entry here, which really makes it immutable data, immutable information. The keywords that we often hear in the blockchain are the ledger. So the ledger is that output. It's like a digital log. It can take several forms. It can be in the form of blocks. It can be in the form of acyclic graphs, but it's always log of information in a certain format. You have the slot here, which is the user access. There's two types of accesses. There's the permission one and the permissionless one. As it clearly states, permissionless one is that anybody can walk past and use it. In a permission environment, you have to have the right to use it, the right to be there. Then there's the processing. It's parallel or distributed processing, not decentralized, and there are two ways of functioning. There are public and private blockchains. It doesn't mean publicly owned or privately owned. Actually, it means publicly operated or privately operated. Let me give you an example. Let's say I'm building a wall. I'm outside. I have lots of big rocks, and I'm building my wall. In a publicly operated environment, anybody who walks past can say, I'm going to help you build your wall. I cannot prevent that from happening, and I have no guarantee that that person knows how to build a wall, and more importantly, will do the same wall that I want to do, following the same blueprint. In a privately operated environment, then I would choose who is helping me build a wall. So I would choose people who know how to build a wall, and I would choose people who will go strictly by the book, by the rules. And then there's the keyhole. The keyhole is the logic in between what comes in and comes out. It can be nothing, gets in, it's stamped and out. Or it can be a script. You get some information in, you make sure that your form is properly filled, it gets out, and it's stamped. Or there are the smart contracts. Smart contracts are neither smart nor contracts, actually. It's just dumb programs. It's just code that will just make a little bit more automation than what scripts are doing, but it's no contract. So let's take the Bitcoin example. Each time I'll be showing you a blockchain, I will show you a plane. In the Bitcoin environment, we are in a public, permissionless environment. That means that all the pyramids here are our users, and they are pseudo-anonymous. In the Bitcoin blockchains, there are tokens, but beware, all blockchains do not bear tokens. You have some here, but you don't have to have any sometimes. Here, those tokens can slide on the plane, but they can neither fall off the plane or you cannot add any more on top of it. And you have the blockchain that is for the moment empty on the right-hand side. All the Bitcoin blockchain does, and that's already huge, is that if a token moves from a pyramid to another, it will write down in an immutable way that this token moved from that pyramid to that pyramid right now. Now, should the token move again, it will write down that in a chronological order, then it moved from that pyramid to that pyramid, and so on and so forth. So as you can see, the Bitcoin blockchain is just a list of movements in between pseudo-anonymous users. Now, why is blockchain so unstable? It's not because of the technology itself, it's because of the way it's been implemented in a public, permissionless environment. Let's go back in time at the very early days of Bitcoin. Here you have that guy who is processing, is helping the blockchain to be operated. In other words, is mining. Is rewarded by the system by a token, but at the moment, the token doesn't worth anything. And you have this guy that comes in, we don't know who that guy is, because we're in a pseudo-anonymous environment, and he has $1, and he asks to the first guy, hey, why don't you trade me your token for $1? The guy says, okay, and now Bitcoin's worth $1. Then you have another guy that comes in, we don't know who that guy is, and he asks to the second guy, hey, why don't you trade me your token for $2? And the guy says, sure, I doubled my money. I mean, so much better than banks. Then you have another guy that comes in. Again, we don't know who that guy is, but he has $3, but $30, but we don't know that yet. And he asks to the guy, why don't you trade me your token for $3? The guy says, hey, plus 50%. Of course I want to trade it. And at the bottom right-hand part, you have that family guy who has $3 hard-earned dollars. He wants his kids to go to university, and he says, I'm not going to keep my money in the bank. I mean, this is so much better. And he asks the blue guy, can you trade me your token for $3? That's all I got. And the blue guy is so nice, says, yes, of course. And what we've just witnessed here is money laundering. The guy had $3 dirty dollars. Now he has 3 clean, untraceable dollars. Of course, at some point we found out that these were dirty dollars. The value drops, and the family man will be happy to sell his token for $1. And the cycle starts off again. One important thing here is that there's no value creation, there's no money creation. All the money is just off the chain. So when people are getting richer, it's simply because some people are getting poorer. Well, the first thing is that here we know who is processing. Just like when we have providers like, I don't know, storage provider, we have a contract with them. We pay them with monthly payments. So here's the same thing. We have people who are providing service to us, so we're paying them with a contract on a regular basis. It's not paid with the tokens of the system. And all of our users are also KYC'd, so we know who they are. We know the first name, the last name, the social security number. We know everything about them. And of course, we record everything. If we create tokens, we're not going to create tokens out of thin air. We're going to create tokens that are linked, that are based to something. So let's assume that we have 4 bars of 1 gram of gold in a vault, each bearing a different serial number. The 4 tokens that we have created also bear the very same serial numbers. So there's a direct link between each token and one of the gold bars in the vault. Should a new user come in? Okay, he goes through KYC because we want to know who he is. And now there's no question, how much is a token worth? Well, it's worth the price of 1 gram of gold on the open market. If it's $1, it's $1. There's no question. And here, no one will try to get in and force KYC or whatever because it doesn't make any sense. So regarding stablecoins, Worldline is live since 2018 with blockchain solutions. Let's take a look at some examples of stablecoins. First, DaVinci, which is pretty close to the example we just saw. DaVinci is a Swiss company that is minting gold. They are minting gold coins or bar of golds. And with that stablecoin platform, we're enabling their customer to not only purchase gold, trade gold, but also they can pay with gold thanks to decentralization. Another example is PayFood. PayFood is a token for soccer fan. As you know, there's going to be the World Cup soon, and people are putting savings for the event. But depending on the country you are based in, sometimes your fiat currency has a bad tendency to drop. So that means that your savings, your value is dropping as well. Here, the proposal is to say, buy some PayFood coins, and these PayFood coins are actually based on a card of currencies. There's a bit of euros, a bit of pounds, a bit of dollars, a bit of lots of different fiat currencies, which keeps it very stable. So not only it allows people to keep their savings and not have savings that are just melting like a snowball in December, but it also allows them to pay with the same currency during the event, avoiding some payment fees and some cross-border, cross-currency type of fees. Another example is the CBDC that we have fully in production with online and offline payments. You probably also heard that we are very close to the ECB, and I've been very active with them. I happen to be a member of the market advisory group, and you probably heard that recently we've been awarded one of the 5 prototypes of the digital euro by the ECB. So what if we were creating a private permissioned blockchain where we would create PID dollars tokens that are back-to-back with real money? Users KYC'd will be just purchasing some tokens, and they could pay any merchant with those tokens, which is not exactly the same as current commercial payments, because here they are genuinely instantaneous, and also the settlement is immediate. Now the merchant already has the money, he can spend it again. We can also provide some loyalty miles, and we can allow people to make dual kind of payments like half dollars and half miles. And of course, merchants just have to send back the tokens to be paid in fiat currency. And of course, if I can create dollars here, I can create any type of other currencies to do, for instance, some foreign exchange ability in between countries that are very close to one another. But I can create also totally different types of assets, like identity. Since I KYC all my users, I know who is over 21, and I can also provide like tokens that are certifying that these users are over 21, which becomes very handy when, for instance, I'm buying some alcohol, where the merchant needs to have a proof that I'm over 21. Here, the proof is directly integrated into the transaction, and it's an immutable information. So it makes the life of the merchant way easier. We can also manage vouchers and subsidies. Like instance here, we have some vouchers for lunch and some voucher for coffee. And of course, depending on the merchant, some will be accepting it, some others won't, depending on the type of services they are providing. And these days, where lots of states are providing subsidies, well, it's a great asset for them to be able to be sure that whatever money they are giving us is only used for the purpose that they are giving it for. So today, we have the switch, which is already a mutualized infrastructure to take all the digital cards to all the merchants. What if we were leveraging this to add trust and make it a mutualized trusted infrastructure? And then we can add digital cash, we can add loyalty, we can add identity, we can add any type of assets we want in the same trusted infrastructure. So here we have one digital rail for all our digital assets. Back to you, Will.
A really good view of the technology that we're working on to actually enable the step going from being a switch that's predominantly in-store to first going into online with modern APIs for open banking, but now into the future of one digital switching platform that can then actually transact all sorts of monetary, identity, and other non-monetary assets within the same transaction. And you may be sitting there going, that's a giant leap from where we are today. Can we actually get there? The answer is not only we can, but we must. We have done this with open banking. Actually, in the few short years since the 2019 report, right, we've actually made leaps and bounds in terms of progress. We've gone from actually just having a predominantly ISO language-based in-store switch to now having one of the open banking switches running on modern API infrastructures. With online FPOS, we've actually leapfrogged the customer experience from some of the leaders of open banking like Europe, Australia, and in the US. In those countries, open banking transactions still require you to be redirected to the bank site to log in with your username and password. And just a straw poll, who here remembers their bank account, their bank username or access number or customer number? And who here remembers their phone number? I'll be very concerned if you don't put your hand up. Great, so we have, as an industry in New Zealand, basically been operating our open banking service, Online EFTPOS, purely on mobile phone number as the identifier. So as a user, you pick your bank when you're checking out, you put in your phone number, and then you get a payment request decoupled from the flow securely inside your banking app. And how good of experience is that? And we, as an industry, have done that, and to great benefit to our merchant and to our consumers without screen scraping. So that's fantastic. We've done that once, we could do it again. And we, as Worldline, we really are putting our money where our mouth is. We are committed to work on this future of payments dream here in Aotearoa that we've talked about. We already started with a good base of in-store transactions and now open banking API switching. From next year onwards, we'll be working on a digital wallet module that could be issued into any bank app or merchant app. So you, as a consumer, can now start digitizing your favorite assets that you carry in your physical wallet into a digital wallet. And we will be working on support for digital ID and then eventually other digital assets such as CBDC here in New Zealand. And as we say, it takes a village to raise a baby, or actually I prefer a beautiful te reo. He waka ika noa. Actually, it's hard yakas. We can't do it alone. For this thing to be successful, we actually need the support from everybody in this room, whether it's bank, our regulators, Commerce Commission, Reserve Bank, other fintechs, merchants, and our consumers to all jump on board and do this together. So we now have the support from France. We've been identified as one of the pilot market, or the pilot market for this technology, because of our track record of innovation here in New Zealand. And they want us to pilot the technology and then take the learning to the global market. So we're going to be doing it, and my question to you all is, will you join us? Thank you very much.